This is the Definitely Uncertain podcast, brought to you by Goldrock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice. This is the Definitely Uncertain podcast, and my name is Darren Rockman, and I'm the partner at Goldrock Capital, the 21-year-old multifamily office servicing high net worth families in Israel and around the world. And today on the podcast, we're going to be looking at jobs. From Tennessee to Tel Aviv, everybody is looking for workers. And here to talk about what's going on and why the job market has gone from 2020, when everybody was unemployed, to 2022, when nobody could find anybody to employ, I'm welcoming Evan Sohn. Hi, Evan.
Oh, Darren, thanks so much for having me on your show. Great to see you.
It's great to see you too. So Evan has had a 25-year career in building businesses and startups in the tech sector. And today he is CEO of Recruiter.com, which is a platform that helps employers, recruit talent faster. He's also the co-founder and vice president of the Ira Sohn Conference Foundation, which raises money to cure and treat pediatric cancer, conferences that I've been to and have enjoyed thoroughly. So Evan, globally, as we said before, we're seeing unprecedented levels of unfilled jobs. And if we looked in October, there were 11 million unfilled jobs in the States, and the number of people quitting has also gone through the roof. 4 million people quitting a month is we haven't seen anything like this since December 2000. So what are you seeing in terms of job demand at Recruiter.com?
So I think there are three real macro factors going on today. I think two of them are, let's call it episodic, and one is more systemic. And let's break those down.
Okay.
I know you want me to keep my answer short. So the first is,
not that short.
We could stop there. The first really is this talent shortage, right? And that was really all these unemployed people coming back that were, again, from December 2020, when the pandemic started, back in March, mass layoffs, mass furloughs, et cetera, and getting those people back to work. And certainly in the worker collar, less skilled labor, the hourly workers. And that's certainly an issue that we're seeing here in the United States. And that's persisting. You go to a restaurant and they're closing early. Airlines are shutting down, and this is not because they don't want to fly, it's because they don't have the staffing to fly. So we certainly have those issues, and let's call those episodic. Those will get resolved within the next 12 to 18 months. The second really is this Great Resignation. The number for November was actually 4.5 million. And you're right, Darren, there's quitting every month. Usually that number was around 3 million. If you look at the annual churn rates in the US, between 22 and 25% on average, different industries. And now that number, we all projected that number to be over 30%, some would say over 40%. And we're certainly seeing those numbers happen. And that also is episodic. People don't want to go back to their old job. I've reprioritized my life. We called it the Great Reevaluation.
Everybody having a midlife crisis all at once.
You know what? I liked working at home. I don't want to go back to the office. Yeah. I moved to Florida, and now the company wants me to come back. Or the company that says, "Hey, look, I know we were remote. We're optimizing for in person. You must come back to the office." And we've seen that happen as well. Yeah. There are other factors. Childcare used to be that grandma watched my children. Grandma's too scared, grandma died. There's a variety of things that are actually happening that we're seeing this sort of Great Resignation occurring. And again, that's also episodic. What we're really also seeing systemic is what we call the job hopper economy. And what that's really happening, and we start to see that happen in Silicon Valley, is that people are you're no longer getting a gold watch for staying at a company for 25 years. That's just not happening at such a generalized fashion as it was happening a generation ago. Kevin O'Leary, Mr. Wonderful from Shark Tank, wrote an article about 2 months ago, begging employees, please stay at your job for at least 24 months. 24 months.
Right.
That's really amazing. Now, reality.
Not 24 years.
That's right. We were seeing that happen in Silicon Valley. Very common to see someone 10-year resume and have 3 or 4 really solid opportunities in those 10 years. And that was not a stigma. There was no stigma associated with it. So if you combine these all together, this is really this job hopper economy. And at the same time, finding a job, meaning like not actually getting the job, but finding a job and applying for a job has never been easier. Interviewing is not this long drawn out, fly to your client, fly to the company, take off a day. We just don't have it anymore.
Get on a Zoom call.
Get on a Zoom call. In fact, you could have interviewed for 3 jobs already today and no one would know the difference. The day and age of bringing a suit to work because and making up a story about going to someone's funeral, it's my uncle's sister's funeral. I got to take the afternoon off. The expression finding a job as a full-time job was not crafted in 2022, right? That was crafted in 1922, right? Not in 2022.
I want to just sort of focus in. You've broken it up into 2 parts. The sort of short term, what you've termed sort of up to 24 months, and then sort of the longer term issues. Let's start with the short term issues. Okay, I think a lot of people have been surprised by how long these short term issues are taking to sort themselves out. Do you see that this is really going to take yet another 24 months before that sort of transition finishes?
I hope not. We have, I think you're going to see really good job numbers tomorrow. ADP projects some really good numbers. So I think you're going to see some really good numbers as stimulus ran out, as people start to go back to work. Omicron clearly didn't help any of this. So I do think that, when I say 24 months, I'm hoping it's 12. Okay. We're seeing lots of companies, pull out all the resources to hire. And a lot of those open jobs are really in those hourly workers where you have to be in person. And so that's got its own stigma associated with it. And, if people want to work remote, it's going to be a hard time for them that they can't find a remote job to then go work at that factory. And I think those are the issues that we're dealing with today.
Okay. Are there particular industries which have been hit hardest?
Yeah, clearly, I think hospitality, retail hospitality, those are really in terms of the hardest to fill. And you could do that anecdotally. Look at the restaurant that doesn't open until 1:00 in the afternoon because they can't staff it in the morning. Right. Airlines, we're seeing this today. People want to fly, but flights are getting canceled. And it's not because of weather. It used to get canceled because of weather. Now, it's just not happening.
And the reason people are not going back to those jobs is because they're worried for job security, that they're worried that the restaurant will close again. And so why the hell should I go back to working at a restaurant?
I think there are a lot of factors. Someone asked me the other day, how are they paying for themselves? Like what the heck? Didn't they want to work? I think, and I started talking about this about a month ago, the impact of the gig economy on the worker collar, right? The less skilled labor. Yeah. I don't think has been properly calculated. I'll give you for instance, I can go work in person at a factory 9 to 5 and get paid $15 an hour, maybe a little bit more now, et cetera. Or I could drive for DoorDash and Uber. Right. And if I could drive for DoorDash and Uber and make more money and do it the hours that I want and not have to be in person, it used to be that I did both. I worked at a factory 9 to 5 and I drove
Uber in the evenings.
Morning and the evening. And now, hey, I'll just do that more. And I think that what we haven't calculated is how much of that gig economy has supplanted and replaced that full-time W-2 role. We take a W-2 role, a full-time job, really for 3 reasons, right? One is healthcare, one is 401k, and one is for a mortgage. And just there are various elements there. So the 401k, the pension plan, that became mobile were transportable years ago, right? So that got that resolved. Healthcare now, I think 40% of the US are on some sort of government healthcare plan. So that's becoming less and less of a requirement. And then finally, mortgage, right? You need a W-2. That's a U.S. term. You need a full-time paycheck, if you will. But if that's not impacting your lifestyle, then being a full-time gig economy worker might be more appealing now. And by the way, the other thing that we saw, Darren, throughout the pandemic is the priority, and we track every month. We have a recruiter index, and we track candidate sentiment from the recruiter's perspective.
Okay.
We actually saw compensation decrease month after month after month. To this month, right? Last month's recruiter index, or for December, compensation as a priority was 20%. 20%.
Wow.
So that means that candidates unfathomable. Right? The answer of I'll just pay the guy more money, I'll pay the person more money, that's not. So this great reevaluation is, how do I want to work? I want to be remote. I want to be home for the children. I don't want to be doing X. I don't want to be doing Y.
Right.
And by the way, I think it's also coming at the expense of consumer spend, right? In other words, you and I come from a cloth where, more money, more money, more money. Right. But if during this pandemic, I said, you know what, I'm not going out for dinner, I'm cooking more, I like being home. And if I make less money, that's okay. Well, then this great reevaluation is really saying, you know what, I don't want to go work in that restaurant. I don't want to go work in that factory.
Yeah, there are a whole lot of ironies in some of the things you just said, because, take the mortgage question. I want to work from home, and yet by doing so, I'm not going to have the documentation or the salary that's going to enable me to buy my own home. Does that break down at some point in time? And do people, or are we in this millennial moment forever where, my personal satisfaction it rises above everything else?
Live for the moment, right? You hit the nail on the head, Darren, right? Live for the moment. What about today? Give me, what am I doing today? And you're right. Driving for DoorDash might make more money than working in a factory, but there's no upward mobility in a factory.
Yeah.
And I think these things are all long-term effects. And we're seeing companies. There was a great article in Wall Street Journal a couple of weeks ago. No one wants to be the assistant manager.
Right. I saw that. Yeah.
No one wants to be the assistant. So don't call it the assistant manager.
Right. When you just selling pizzas.
That's right. I heard a great ad by Amazon, and they're brilliant at this. Right. Be a holiday packager. Right. So, hey, do you need extra money for the holidays? Come work early hours, late hours, weekend hours, and you could be a wrapping, a packager. Right. Now, what they said was, to run an ad, hey, do you want to work in a warehouse? They
taking stuff off shelves onto a truck. Yeah.
Yeah. They turned that into oh, wow. Yeah. I need some extra money for the holidays. What a great opportunity. Right. And I think, that's our guidance to our clients is that, don't tell someone this is a call center, right? Don't tell someone this is a call center. Tell someone this is a great opportunity to learn interpersal skills. And it's a 2-year program, and by the way, that's not just a call center. We have some very, very serious, high-tech clients, and I was, musing around with their global head of talent. And I said, you should be presenting to people, hey, this is a 36-month project, right? This is a 36-month project.
Come in, finish off, and then you're going to go out with all these skills.
Pay you a ton of dough to work for 36 months. And when you're done, if you take another assignment at the company, I'll give you a 30-day paid vacation. Right? In other words, just embrace the fact that these are not lifetime decisions that people are making.
Right. So if you break it down, how much of this is Corona? And how much of this is, the continuation of issues which were existing pre-pandemic, but are just maybe coming to the fore right now?
Yeah. So I think the answer is this was happening, right? The job hopper economy, and I gave a talk on it back in October. This was a changing world of work. This was going to happen anyway. It was happening. If I told you, I'll give you the visual, Darren, right? If you saw a resume 3 years ago of someone who's 30 years old, who's been at the same company for 10 years, right? Forget the company. It's not McKinsey or Goldman Sachs or Google, right? You would describe that person as committed, steadfast, loyal, stable.
Yeah, really employable,
right? So 2022, you look at that same person, 10 years, same company. How would you describe them? Risk averse, lazy, not interested in trying anything, comfortable. And so what's changed? What's changed is that the availability to move jobs is just so much easier than it was 3 years ago. Right. And that was happening. Again, I think it's really ironic. We were talking 3 years ago about the efficacy of remote work. And yet, right. Now we work from home 1 day a week, right?
Now we're asking about the efficacy of working at the office.
That's right. That's right. And by the way, there were always segments that were remote. Sales was, you always had people in sales out in the field. Development. Oh, we have a development team over here. We have a development team over here. We don't just have them in the center office. Yeah. So I do think these things were happening anyway. Before the pandemic, we really were in a great talent shortage. Right. By the way, great anecdote for you. It was the highest employment of ex-cons in the history. Wow. Why? Because if you need a Java developer, I don't care what your background was. Right. I need a Java developer.
Exactly. Well, that goes on that CV, right? 3 years at this company, 2 years in the penitentiary, 3 years at that company.
That's right. Just throw it right on your CV. Right. So I do think that we were moving to a skills-based economy anyway. I think these are all things that were happening. But the biggest thing that happened is that we removed the stigma of leaving companies. Right. We made it incredibly easy to apply for a job. Incredibly easy. Click, done. Right. We made it incredibly easy to interview for a job. And we removed any stigma associated with leaving jobs. And what the pandemic has done is it's really, really expedited this high, we call it work from anywhere. I believe, and we believe at recruiter.com, that's going to morph this year to hire from anywhere.
Right.
So I can hire from anywhere.
Right. So I want to get to that in a second, but first something else. When you look at this from the perspective of an employer who is now changing their team, having to invest in HR, in recruiter.com services as well, which is great for you, but also training, getting people up to speed, isn't that creating an additional overhead for companies, which is going to be significant in the medium to long term?
100%. I completely agree with you. We've had that own challenge in our own company. Right.
But at least you're a net beneficiary, right? Most people are going to be net losers.
Yeah, look, the end of the day here, the hottest sector, one of the hottest sectors right now is recruiting, and we're recruiter.com. So, it goes both ways. I think every company needs to be thinking about building their bench. How do you build a bench of employees? What's the progression? No longer waiting around for people to say, hey, I'm looking to leave. So help me, get me a better, give me more money or more opportunity because I'm looking to leave. You got to get ahead of it. We actually mapped out a progression program for almost everyone in the company. And we got about 70 employees now and really spent, a couple of weeks in December mapping out, lots of people in the company where we want them to be by the end of the year. Right. And I think companies need to embrace the fact that if you're not showing progression to your employees, certainly the new generation of employees, every 3 to 6 months, rest assured they're looking someplace else.
Right. You touched on before this issue of hire from anywhere. Are you going to see now? There's always been offshoring, and there's been remote, nearshoring, and all of that. Do you expect that to really escalate over the coming? Yeah.
Yes.
Okay.
And I'll tell you why. I worked for a Silicon Valley company for a bunch of years, and I live in North New Jersey. So I was always that remote person, the all hands meetings, there were 5 people on Zoom and everyone else was in the office. And I would fly to the office every couple of weeks and I'd fly in for the holiday parties, but I was always that remote person. Imagine an enterprise, imagine a time where the bulk of the company is actually remote, right? So all of a sudden now, if I want Darren, in other words, this geographically undesirable employee, before you would say, gee, person A will come to the office all the time. The person B is more qualified, but they live far away. You'd go with person A because that's part of your culture, et cetera. Yep. Now, that's going to be a hard decision to make. And again, different companies will make different decisions, right? You have JP Morgan that said, thou shalt return to the office. And then you have Shopify that says, never come back to the office.
Right.
So it all depends what they're optimizing for. But I think hire from anywhere is going to be amazing. And by the way, there was an article in Business Week about Shopify, and they're like, gee, when we got rid of our office, well, all of a sudden we got engineers from Facebook and from Google, right? Who don't want to leave, the Bay Area.
Don't want to sit in traffic. Yeah.
They don't want to know. They don't want to move to Ontario, right?
Yeah.
They don't want to move to Ottawa.
Speaking of traffic, I'm going to tell you a really interesting anecdote from Israel, which is the traffic in Israel has never been worse. And, I think for months, people were trying to work out, well, if nobody's going to the office, why is the traffic so bad? And then people realized that people are at home going out and doing errands, right? So the middle of the day, you're working from your home and, you go off and, pick up a package or, go and pick up something from a store or go visit your mum or what have you. So the net number of hours that cars run, though there are also more cars, has actually increased, which was somewhat unexpected.
Fascinating. That's fascinating. Look, we're a big, I'm a big fan of WeWork. They're actually a partner of ours at recruiter.com. Right. And I think, if you were going to craft a new company to support the new work environment, WeWork certainly makes sense. So for all the people that are quote unquote working from home are really just not going into, they're working
the central office
for the company, but they're going to their local office. But I think there's a trickle effect, right? Used to be we worked out of a Starbucks, now we'll go work out of a WeWork. Yeah. Or out of our homes.
Yeah. Going back to sort of some of the impacts of this, what you seem to be saying is that the employment market has run ahead of the technology market in the sense that you need technologies, more technologies in order to enable the more human elements of work that people don't want to be doing to get done. And so, are you expecting there to be, if you think about, a McDonald's or, an Amazon distribution center, or obviously driverless cars is one such direction. Do you expect to see a whole lot of new technologies to start filling in the gaps that this sort of great rotation or, great, whatever great thing we're talking about has caused?
Yeah. First of all, you can't say anything without either unprecedented or great, whatever, right? Just to fill in the gaps there. The answer is, I view this a lot like the security industry. And, in my intro, you talked about, I've been involved in lots of different sectors.
Right.
There was a time where no one had a chief security officer. No one was in charge of IT security, right? Yep. Michelangelo, for anyone old enough to remember, that's what really put, antivirus software on the market. Right. It needed a great catastrophe like Michelangelo that caused all of a sudden security, and every company has a security plan, et cetera. It became, why do companies have a chief diversity officer? Well, diversity is an issue. So people are allocating resources and both technology and people to ensure that we're meeting the security requirements, meeting our diversity requirements. And again, whenever there's this macro shift, companies of all sizes sort of say, we need to have this associated with us. We didn't do sexual harassment training, 2 generations ago, right? Just didn't happen. Now we have outsourced services that ensure that we're complying with the latest requirements for HR and all these other things. And I think that supply chain of candidates, employees as a supply chain is going to be something that every company addresses, right? So the bigger companies all have a global head of talent, right? That's a position. And I think that those things are really going to be cascading down to all companies. Every company is going to have something that's dealing with how do I make sure that I'm constantly recruiting and hiring the right people and really tracking that accordingly. And you'll see probably this year, plays to the CFO. Hey, I can get your employee churn out by 2 more months. Hey, I can get your average employee to stay for an extra 2 months. And here's, I'm going to run the ROI associated with those things using AI tools, et cetera. Right. And I think that there's going to be lots of these things there, and that companies of all sizes really start to address. Right.
So we're going to have a new KPI for employment.
That's right. Or tools, right? Outsourcing. We're going to have whatever size company. Who is the person responsible for your company's security? Do you have someone? Right. No, we outsource it to somebody. Great. Well, who do you use to make sure that someone is out there constantly recruiting for you? right? What are you doing to ensure that your employees are not leaving so quickly? That whole sort of talent development, talent effectiveness, these are all the things that we're going to be doing. By the way, we're going to be doing a webinar series on like recruiter effectiveness. And one of them is on, how to read body language over Zoom.
Right. Very cool.
How do you do that?
Yeah. And there are also AI tools that are now being developed to do exactly that.
That's right. How do you sell company culture, in a virtual environment?
Right.
Hey, Darren, come work for us. We're a lot of fun.
Right.
What do you mean we're a lot of fun?
We got pizza on Tuesday.
Yeah, that's right. Quick anecdote for you. I was meeting with another, global head of talent of a tech company. And I was out in his office in Santa Monica. And we walked around, beautiful office, and there's a gong, big giant bell every time they close a big deal. And they have beer, beer Thursdays, pizza Wednesdays, ice cream Fridays. And he goes to me, Evan, we have this great culture, right? We're blocks from the beach, but if no one's ever coming back to the office, this means nothing.
Yeah, exactly. What's it going to do for me? Yeah.
Right. So I think this great, there's the word great again. I think this great reevaluation is really what's happening. By the way, I heard a great podcast about a month ago of a founder of a company goes, look, I'm an engineer. I surrounded myself with engineers that didn't care to be friends with each other, right? Get your work done, go home, hang out with your family. That was their culture. And by the way, I loved it because let the company decide. Let the company decide what they want to do. Yeah.
Very, very interesting. I want to sort of round this off, and this has been a fascinating discussion, just to think about what are some of the investment implications of the Great Resignation and this new sort of more mobile job economy. What does this mean? What does it mean in terms of wages and salaries, and what does it mean more broadly in terms of the next few years for people that are considering the investment implications?
So I would probably, as an investor, I would probably say to a company, what's your employment churn? What's your strategy on employment? Right? How tied are you to your employees in terms of your ability to deliver? Like that's a risk now. A real risk factor is, if we require N number of employees in order to handle this, what are you doing about that? Yeah. What's your succession planning? Those are really the questions that I would be asking. In any company that is relying on heavy development, what's your strategy to ensure that you're going to have the constant flow of talent to really, keep the engines running? I think there's some serious, ramifications to all companies. Right. Be the equivalent of asking company, what's your security policy? What's your, have you done intrusion detection? What are you doing? What's your security policy? By the way, you're seeing companies invest only in companies that have very serious diversity requirements. Yeah. So people are using this opportunity to not just rehire, but rehire the right way. The good news and a little self-promoting is, all these.
Not a little good for a lot of self-promoting.
I think all of these trends are really about, you need more people in talent acquisition. You need a bigger funnel. You need constant tools. And those are the things that we're providing to our clients. And there are other people providing it too, but, we just do it at a much larger scale. Right. We signed a deal with a company called letsdeal.com. They're a global payment platform for hiring, right? So you could hire, 10 developers in Albania and not deal with the corporate political issues of setting up an office in Albania, but actually just have it all go through Deal. That could either be full-time as a full-time employees or as, 1099, gig economy workers. And that's really, all of our recruiters are now on that. It's really just a great opportunity. We just opened up, signed up more recruiters over in Latin America now to do some projects. And we're onboarding through this great platform. And I think those sorts of infrastructure things combined with companies that are really acting on a global basis are really going to help all companies of all sizes really address their needs.
So to finish on a really optimistic note, this is good news for the developing world and good news for maybe wealth rebalancing, as after many years where things have gone in the opposite direction, whereby it doesn't matter where you are, in which part of the world, and maybe not even what your first language is, as long as you can speak a reasonable English, you're going to be able to find a job and hopefully a good one.
Yeah, I'll give you a great line. And I did this, in a Seeking Alpha video. I said, everyone is now more valuable than they were 2 years ago.
Right.
Everyone, right? The CEO, the chief product officer, the Java developer, and the dishwasher are actually all more valuable today than they were 3 years ago. And the reason is that there's someone who wants Darren's skills. And that person is no longer bound by geographic hurdles or anything else. If they want Darren to work for them, there's nothing stopping them. And Darren, you can get any job that you wanted on the planet, assuming you're qualified, et cetera, right? You're no longer bound by, geographic issues, et cetera. It is as you said, Darren, it's going to open up so many opportunities for really everybody, developing countries, the companies that are upskilling their workers. Amazing opportunity now, right? It's no longer just, the large companies that could open up. Remember what Y2K did was opened up India as a development center, right? We started outsourcing, development in Y2K. We didn't go backward.
And then we realized they could do a whole lot more.
Right. Or we realized that they could do more and free up our time to do other things. Sure. Right. So we used to use them for just, code maintenance. Now they're actually doing full-time development. Yeah. When was the last time you saw a call center here in the US? They're happening, and they're good now because they're good, part-time, work from home type of experiences, but they're not dominated here in the US like they were back, in the 80s and 70s. Yes. So I think there have been these macro changes that have happened, and we've all benefited from them in many ways.
Okay. Well, we're all more valuable, and particularly the members of our families are even more valuable to us. So we'll maybe end on that. Evan, this has been fantastic. I really appreciate your wisdom, your insight. I think this has been an issue that a lot of people have been confused about, and you've given really good clarity and some real thought, food for thought. So thank you.
Thank you very much. Thanks for having me. And let's do this again soon.
Okay, I look forward to it. Well, we're going to book again for 6 months, and we'll see how the world's doing then. Hopefully we'll be doing even better than we are now. Okay.
Absolutely.
Okay, Evan. Thank you very much.
Thank you.